Hey, it's Wednesday, 22nd. Quick run through of my thoughts on the markets for today. I've been talking about gold going lower for a while, very simply because we had some sell signals, bullish engulfing candles and everything else. That's worked. We've come down to the 38.2% fib and we're holding there at around 1828. Last week we dipped just below it, but we recovered. That was a bit confusing because I thought that would hold, but it's holding now. Eventually, I think we will break down. I think this is a sideways consolidation. Doji, hammer. I'm seeing signals that this is a consolidation, and then we should see a continuation lower, probably to the 500-day moving average at the low $1,800 area. We could even get down here to the 100 DMA at around 1790. Those are my targets anyway. We'll see how the market reacts down there and whether we get signs that we're going to get a bounce, because we are oversold on the daily chart. But as I say, nothing to tell me at the moment that the market's going to turn around and go up. Silver also looks negative to me, probably a bear flag. We had a hammer which indicated that we could climb. We've gone straight to my sell level at 2210. Yesterday's high, you can see why I've got a sell level there. 100-day moving average, 38.2% fib. So it's good resistance, and it did hold on the way down initially as well. We'll see if we turn around from there. Obviously, I think we will. Now, I've been calling the dollar higher, and this is the dollar index. It's painfully slow. We're crawling sideways, aren't we, really? I do think that eventually we will turn up, but as I say, it's a very, very slow process. The New Zealand dollar versus the Aussie edging lower. We have got some support there. I've put that on the trade sheet, so I'm not going to elaborate today. Aussie dollar, the resistance level is certainly working. I think we're probably going to come down to this support level. We bounced off that area last week in the Aussie dollar in the low 68 area. And it looks like we could retest that. That is a strong support level. Well, that's the key support level for this week. And obviously, I've put it on the trade sheet. By the way, if you're not a subscriber and you're watching this and you're wondering, what am I talking about in the trade sheet? This is what my subscribers get every day. I fill in a sheet with all the best trade ideas of the day. Now, back to the markets. Japanese yen, dollar yen, I should say. Dollar, as I've explained, I'm expecting the dollar to push higher. But again, against the yen, it's a very, very slow crawl. The volatility is easing off in financial markets at the moment as we decide which way the economy is going in the US and what the Fed's going to do about it. I do think we're going to end up around the 136.50, 137.00 area, but it's a slow crawl higher. Euro should continue to ease. As you know, I had a sell level at 107.00, 107.20. That's worked this week. I think that's actually the high for the week. So if you're short from that level, it's looking good. 106.00 is the first target. Anyway, all the information is in today's report and on the trade sheet. But as I say, I have a negative bias to the euro versus the US dollar. Stock markets, a while ago, weeks ago, I talked about consolidation in the stock markets. No sell signals. The DAX is just trading sideways in this kind of messy range. You can see there's nothing I can add to that. I'm just pointing it out, really. When I add this trend line, you can see what's going on here. Previous resistance level acting nicely as support. So obviously, if we do break down below 15,300, that will add a little pressure to the downside. But I don't see a big move to the downside, even if we do break that area. 15,000 would be a reasonable target. FTSE, I warned a few days ago when we had this doji that we were probably going to consolidate, trade sideways, maybe a little bit lower, but no sell signal. So far, that's correct. This is the way it's playing out, mostly sideways. A little dip to this trend line, which goes back to December. We'll see if that holds. That's around the low area. If we break, 78.50 looks like the next target for the FTSE March future. Bit more movement in the US stock markets, panicking over potentially higher interest rates from the Fed as the economy looks strong, indicators showing that the economy certainly isn't slowing down. We are hitting a very good support level in the S&P, though, at 4,039.90. I don't see a big move to the downside on the cards. Will be interesting to see if this holds. Definitely worth trying along down here. We've got trend line, 50-day moving average. We've even got some fib support down there. So all the ingredients in there for a good support level today at 4,000 down to 39.90 in the E-mini S&P March contract. Waiting for a breakout for the Dow Jones. This is the E-mini Dow Jones contract, trading sideways in this horrible, messy, choppy situation. So we broke the support level down at 33,600. I had a stop below 33,500 if you were long, buying down at the lower end of the range. Anyway, we've broken it. Reversing into a short position was the plan. That seems to work. I think there's a little bit more downside, which is interesting because the S&P is probably hitting a support level, but I don't see a support level for the Dow Jones. So I think there's a little bit more room on the downside as I've written in the report. Okay, that's the summary for today. Good luck if you are trading.